Welcome to the Deep Dive, where we crack open the latest earnings calls to give you the crucial insights.
Yep, digging beyond the headlines.
Today, we're taking a close look at Ituran Location and Control, ticker ITRN, and their second quarter 2025 results. This past quarter really presented, well, a fascinating mixed bag, didn't it? Challenges, strategic wins.
Absolutely, and it led to a pretty noticeable reaction in the market, as you said, because while, the initial glance at the numbers might give some pause, a deeper exploration really reveals areas of significant underlying resilience and some truly promising long-term initiatives, too.
Okay, so let's do that. Let's unpack it. What happened? Why did it matter? And what's the outlook?
Let's get into it.
All right, let's not waste any time.
Okay.
Diving straight into those top-line numbers. It looks like Ituran had a bit of a tricky quarter, at least on the surface.
Oh, well, yeah, the immediate takeaway for Q2 2025 was Ituran reported GAAP earnings per share of $9.67. Revenue was $86.8 million. And both of those figures came in below what analysts were expecting. EPS missed by 0.06, revenue by about $2.4 million. So yeah, on paper, a clear miss.
Okay, that sounds like a negative signal right off the bat. But is there more to the story there? Or is it just those headline misses?
Oh, there absolutely is. You have to look closer. While total revenue grew, well, a modest 2% year over year,
right,
or 4% when you account for local currencies, the real core of Ituran's business, their subscription revenue, that tells a much healthier story.
Okay. And subscriptions are key for them.
Exactly. That segment makes up a substantial 73% of their total revenue. And it saw a robust 6% year-over-year increase, actually 7% in local currencies.
That's pretty solid.
It is. And they added a solid 40,000 net subscribers, too, pushing their total subscriber base over the 2.5 million mark.
Wow, 2.5 million. Okay.
So you have this mixed bag, right? The product revenue decline definitely signaled caution to the market. It forces you to weigh these sort of temporary impacts against that underlying, more stable subscription growth. It's that classic tension, short-term noise versus long-term fundamentals.
That divergence between strong subscription growth and declining product revenue is really striking then. Was this just a one-off blip, do you think, or does it signal something more fundamental changing?
That's a great question. And management was very clear on this one.
Okay.
They attributed the 6% year-over-year decrease in product revenue directly to that brief 12-day conflict between Israel and Iran during the quarter.
Right, I remember that.
Yeah, so that event caused a temporary halt in new car sales in Israel, which directly impacted their product installation revenue. They actually called it a slight delay in product sales.
Just a delay.
Basically, yeah. Due to an approximate 2-week suspension of economic activities there. So it really does appear to be more of a one-time external shock, not a structural issue with demand for their products. It does underscore, their vulnerability to regional geopolitical events, but the core subscription business seems pretty much untouched.
Okay, so a temporary hit to product sales. Understood. But a company's health isn't just about the top line, right? Let's shift gears. Profitability, cash flow. How did Ituran fare there?
Yeah, good point. Profitability remained solid, actually, despite the revenue miss. Gross profit came in at $42.9 million. That translates to a 49.5% gross margin. Pretty healthy.
Only a 50%, yeah.
Operating income was $18.3 million for a 21.1% margin. Now, EBITDA, which, a lot of investors watch closely.
Gives you that operational cash picture.
Exactly. Before all the interest, taxes, depreciation, it came in at $22.9 million. That's a robust 26.4% margin.
Okay.
Interestingly, while EBITDA saw a slight 1% year-over-year decrease in reported U.S. dollars, it actually grew 2% in local currencies. Net income showed a similar pattern, grew 2% year-over-year to $13.5 million, but up 6% in local currencies.
And I saw something about a one-time operating expense, their 30th anniversary. Did that drag things down a bit?
That's a sharp observation. Yes, they did have that. While it's a nice milestone, this non-recurring cost likely masked a slightly better underlying operating margin this quarter.
Oh, okay.
Management didn't quantify the exact hit, but yeah, it suggests their core operational efficiency was perhaps even stronger than the reported figures let on. Makes the reported profit look just a touch weaker.
Interesting. Good detail to catch. And speaking of financial strength, how's the cash situation, especially with those dividend payments they make?
The cash position is remarkably strong. I mean, this is a major highlight.
Really?
Yeah. The company generated robust operating cash flow, $22.4 million just during the quarter. They closed Q2 with a healthy net cash position of $88.7 million.
Net cash.
Net cash. And that's up from $77.3 million at the end of 2024. And crucially, zero debt. Absolutely no debt.
Wow, okay. That's impressive.
It really is. And this financial strength allows them to return significant capital to shareholders. The board declared another quarterly dividend, $10 million, or deal $1.50 per share.
Right.
Which, based on recent prices, works out to an attractive annualized yield of around 5%.
5% yield. Nice.
And they actually increased that dividend policy by 25% at the end of last year. Plus, they still have about $6 million left under their share buyback program.
And they plan to use that.
Yep. They intend to deploy in the coming quarters. It really paints a picture of a very financially disciplined and shareholder-friendly company.
You mentioned local currency performance being stronger than the reported U.S. dollar figures earlier. Can you elaborate on the foreign exchange impact? Sounds like a bit of a headwind.
You're right. There definitely was a headwind there. The strengthening U.S. dollar against many of the local currencies where Ituran operates, well, it had a slight deflating impact on their reported results in dollars.
Right, the translation effect.
Exactly. So when they convert their local earnings back into dollars, those stronger dollars mean fewer units of local currency. But there was another piece, too.
Oh.
The Israeli shekel strengthened significantly against the U.S. dollar right at the end of the quarter. And that led to a non-cash finance expense of $1.3 million.
Non-cash. How does that work?
It's essentially an accounting adjustment. Because the shekel got stronger, the U.S. dollar value of their cash held in shekel-denominated deposits in Israel actually decreased on paper when translated back.
Ah, okay. So a paper loss, not operational cash going out the door.
Precisely. It's important to distinguish that. It's a financial nuance from currency moves, not a hit to their core business performance.
Got it. Okay, so despite these near-term headwinds, the conflict impact, the currency stuff, what's the company's strategic focus? What's the outlook for the rest of 2025 and beyond? Are they still bullish on subscriber growth?
Oh, absolutely. Management reiterated their full year 2025 net subscriber adds guidance. They're still calling for 220,000 to 240,000 net adds.
Okay, so that implies a pickup in the second half.
It implies a significant acceleration, actually. That's a key part of their thesis going forward. Strategically, the focus continues to be expanding in Latin America.
Right, where they're already strong.
Exactly. They hold a market-leading position there, working directly with OEMs, the big car brands. That OEM channel is incredibly sticky and high value for them.
And what about that motorcycle telematics initiative? That sounded like a fascinating new area when I read the notes.
This is a really key new growth avenue for Ituran. Huge potential. It significantly expands their total addressable market, basically, the whole universe of potential customers.
Because motorcycles are so common in some regions.
Precisely. They noted motorcycles are a top mode of transportation in many parts of the world, especially emerging markets. And the major highlight here was their new partnership with BMW Motorrad in Brazil.
BMW motorcycles, okay.
Yeah, they'll be installing Ituran solution directly onto BMW motorcycles there. And they expect this to contribute tens of thousands of new subscribers annually in the coming years.
Tens of thousands annually just from that one deal.
That's the expectation. And it's not just a one-off deal, right? This partnership serves as a template. They want to use it to scale into other high-growth motorcycle markets.
Ow.
Through similar partnerships with local OEMs and also aftermarket channels across South America, they even mentioned ongoing talks with a new OEM, so there's momentum beyond BMW.
Okay. This could really be a game changer for their long-term subscriber growth, couldn't it?
It really could. It's a significant expansion.
That BMW partnership sounds like a big unlock then. Beyond that, what else is driving subscriber growth? Maybe in more established markets like Israel?
Yeah, good question. In Israel, unfortunately, the high car theft rates continue to drive strong, consistent demand for their services. It's a tough reality, but it's a reliable demand driver for Ituran security solutions.
Right.
But they're also reaching new subscribers in segments they hadn't tapped as much before, like lower-priced new vehicles, or even expanding more into the big secondhand car market.
Okay. Broadening the base.
Exactly. And their usage-based insurance business in Israel is also seeing good traction. That contributes to subscriber growth by offering, more tailored insurance based on actual driving habits. It's a multi-pronged approach.
Looking at the bigger picture then, what's Ituran's long-term strategic vision, say, for the next few years? How do they see themselves evolving?
Well, the company's multi-year vision really centers on being this resilient, subscription-heavy, cash-rich telematics provider. That's the goal.
Yeah.
Their core strategy revolves around deepening those OEM channels in Latin America, expanding into new vehicle types like motorcycles, the big one we just discussed, and consistently returning cash to shareholders, dividends, buybacks, reinforcing that strong financial base.
So steady compounding growth, basically, leveraging strengths, tapping new markets.
That's the idea, yeah.
Okay. Now, for the part many listeners are probably keenly interested in, how did the market react to all this? Was it just focused on those headline misses?
The market reaction was, well, unequivocally negative and quite swift.
Oh, really?
Yeah. Shares traded down sharply in pre-market, like around 9% to 10% right after the earnings release. The stock opened way lower, $39.03 from its prior close.
Ouch.
And by late morning, it actually hit an intraday low of $36.19. That's roughly 10% down from the close before earnings. It was a strong negative signal, definitely driven by those initial headline misses.
That's a really sharp sell-off. But why so pessimistic? Given some of those positive underlying trends you highlighted, the strong subscription growth, the motorcycle strategy, it almost feels like the market missed the bigger picture.
You've hit on the core tension right there. Traders seem to primarily focus on those headline misses for GAAP EPS and revenue versus the consensus.
Just the negatives.
Pretty much. The near-term macroeconomic headwinds, the Israel-Iran conflict impacting product sales, the FX movements, they unfortunately overshadowed management, reiterating that strong full-year subscriber guidance and the robust dividend plans. And the trading activity was exceptionally high. Volume was around 329,000 shares, which is about 4 times the 10-day average. That suggests significant market capitulation, people just wanting out.
Wow.
So while management presented, I'd say, a cautiously bullish outlook, emphasizing the solid subscription growth and cash returns, the market's initial take just focused squarely on the reported misses and those immediate challenges. Classic short-term noise, drowning out longer-term signals, perhaps.
So Ituran definitely took a hit from the market. But for those of you out there who, thrive on finding potential opportunities and perceived setbacks, this leads us perfectly to our favorite part.
Ah, yes.
Playing out a hypothetical, outrageous, but plausible trade idea. Strictly for discussion, of course. This is not financial advice.
Okay, absolutely. Given that roughly 10% immediate sell-off, my outrageous but plausible idea would be to maybe initiate a long position in ITRN.
Go long after that drop.
Yeah, or perhaps utilize, say, a long-dated call option strategy. That could leverage potential upside while defining your risk.
Intriguing. So you're basically betting the market overreacted, that it'll get smarter and look beyond the immediate noise. That's a bold stance after a 10% drop. Walk me through the rationale here.
Precisely. That's the core argument. The market's reaction feels overly focused on transient, non-recurring issues and those headline misses, while largely ignoring the robust underlying fundamentals.
Like the conflict being temporary.
Exactly. That 12-day Israel-Iran conflict, yeah, it impacted product sales, but it is a temporary event. It's a blip, right?
Yeah.
Not some fundamental breakdown of their business model.
And the subscription side really shows that resilience, doesn't it?
It absolutely does. That core subscription engine, almost 3/4 of revenue, remember, it continues to grow healthily. It demonstrates impressive resilience. That 6% year-over-year growth, the 40,000 net adds, that's a steady, predictable revenue stream.
Right.
Plus, the balance sheet is pristine. We talked about that. $88.7 million in net cash, 0 debt, generating strong operating cash flow, $22.4 million this quarter.
That financial strength gives them options.
Big time. It lets them pay that substantial 5% annualized dividend, continue the buybacks. That provides a strong floor, potentially, to the stock price, and a compelling return for patient investors while they wait.
And the big strategic play, that motorcycle telematics initiative, where does that fit into your argument for going long?
That's a huge piece, maybe the most important long-term piece right now. That motorcycle initiative, especially the BMW Motorrad Brazil partnership, it's a significant expansion of their total addressable market and potentially underappreciated right now.
You think the market's sleeping on it?
I think it might be. This OEM integration is a powerful long-term growth driver. Remember, tens of thousands of new subscribers annually expected just from BMW. So the market's knee-jerk reaction on August 19th, it might present an opportunity.
An opportunity to
acquire a cash-rich, growing subscription business at a discount, betting that the short-term macro noise clears up and you get the long-term compounding power of these new market entries. So it's seeing the forest for the trees.
Yeah.
The forest here looks pretty green long-term.
So there you have it, Ituran's Q2 2025 earnings. a quarter, really, of conflicting signals. Headline misses met underlying operational strength and some significant strategic foresight.
It's a classic case, isn't it? Where the immediate market reaction tells one story, but digging deeper into the financials, the future initiatives, it paints a much more nuanced picture. Ituran's still a significant player in connected car services, adapting, expanding its reach.
As always, our goal here is just to give you the insight so you can form your own informed opinions. And remember, the discussions on the deep dive are strictly for informational and entertainment purposes. They should absolutely not be considered financial advice.
Definitely not. We strongly encourage you to review the company's filings yourself. Do your own due diligence, always.
So as Ituran navigates these cross-currents, maybe the real question for you, the informed listener, is this. Does the market sometimes undervalue companies with strong recurring revenue and clear growth paths just because of short-term external noise? Something to consider. Thanks for joining us for this deep dive into Ituran.
Thanks, everyone.
We'll be back soon with another one.